A very good morning, dear students. Welcome to e-learning classes of Sacred Hearts of the subject Business Studies. Dear students, in the previous lecture, we have concluded the chapter number 3, Private, Public and Global Enterprises, in which we have discussed about the departmental undertakings, its features, merits, demerits. Thereafter, we have discussed about the public corporation, merits, demerits, features, government company, its different features, its merits and demerits. Thereafter, we have discussed the concept of the global enterprises, that is the MNCs, multinational company, also known as the transnational companies or enterprises. Its feature we have discussed. Thereafter, we have discussed the joint venture and the PPP, that is a public-private partnership, in the previous chapter. Thereafter, in the last lecture, we have discussed some case studies as well. Dear students, today we are going to start our chapter number 4, that is the business services. Initially, the meaning of the service sector. So, service sector includes the commercial firms engaged in the banking, communication, warehousing, transport, insurance, etc. And these services constitute the basic infrastructure which is must for the smooth flow of the business activities. So, simply we can say the services used to provide a base or the infrastructural facility for the growth and expansion of the business activities. Now, the characteristics of business services or of services, the very first is intangible. That means the services cannot be seen, but their presence can be only felt out. One can experience the quality of the service only after experiencing it. The second one, lack of homogeneity or inconsistency. If we talk about the services, then services are not homogeneous for every of the particular person, for every of the particular customer. The different type of services is being provided as per the need and as per the requirement of the particular customer. The next one is the inventory, or we can say it loss. One of the main feature of service is that services are consumed at the same time when they are produced. That means whenever the services are produced, they are used immediately. It is not like that to maintain the inventory of the services or the stock of the services. And if any of the services is provided and it is not used, then it seems to be the complete loss. And the next feature is the non-transferability or inseparability. That means you cannot separate the service and the service provider. The service will always be adjoined with the service provider only. Now, the next topic, that is the classification of services. The services have been classified into 3 types: business, social and personal service. The very first is the business service. So, all those services which facilitate the growth and development of the business are considered as a business services. Then social services, then these are the services which are carried out voluntarily to achieve the social upliftment or the social well-being of the society, and specifically it is centered for the weaker section of the society. For example, providing them cost-free healthcare facility, improved sanitation in the slum area, education, and so on. Thereafter, the last one is the personal services. Then these services are experienced differently by the different customers. That means these services are created on the spot as per the demand. For example, tourism and restaurant are the best example of the personal services. Now we are going to discuss about the various business services. So there are a lot of services such as banking, insurance, post and telecom services, warehousing and transportation. Today we are going to discuss about the banking services. What is in bank? So dear students, a bank is an institution which attract money on deposits of the people for being lent to industry or to trade. In the simple words, we can say bank is a financial institution which accepts the deposit of the people and accumulates the total amount and lent it for the purpose of business and investment. According to Indian Banking Regulation Act 1949, what is the definition of the bank? Accepting deposit of the money from the public for the purpose of lending or investment, that is known as banking. Now, the types of accounts. that can be opened in the bank. Then the very first is the savings deposit account. It is a simple and one of the most popular form of account in which a particular person can open the account by depositing a certain amount, and he can deposit his money whenever he is having surplus and withdraw the money whenever it is needed. And depositor is issued a checkbook and the passbook. A checkbook and a passbook is given to the account holder. The second one is a current account deposit. Current deposit account, it is the account that is specially meant for the businessman, and the account holder can deposit the money and can withdraw the money as times as he wants. And in the current account deposit, the overdraft and the credit facilities are given. No interest is provided in the current account, rather some of the charges are taken by the banks for providing the current account facility. The third one is the recurring deposit account. So it is a particular account in which a certain amount is deposited again and again after a specific period of time for a certain time span. The amount together with interest is repaid on the maturity, and when the amount is returned at the time of maturity, the amount is returned. The rate of interest on recurring deposits is higher than the saving account. So whatever the rate of interest is provided on the recurring deposit account, it is higher than the saving deposits account. The next one is the fixed deposit account. In this, a certain amount is fixed for a certain period of time, and this certain period of time can be from 6 months to 5 years. And the longer the time period of the fixed deposit, the higher will be the rate of interest, and the rate of interest on FD is the maximum. And the last one is the multiple option deposit account. In this account holder is able to get the options of multiple accounts simultaneously. For example, the combination of saving and current account, in which the interest is also provided, in which the liquidity is also given to the account holder, and the interest is also given. So this is all about today. God bless you all. Lots of love.